Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I was going through the comment section. I want to answer a couple comments here. I think you guys have some really good comments here. One of the questions is, do you think it's prudent to keep adding to my position in CDEV as it rises? And I'm going to quote Eric Sprott here. I remember him talking about this in one of his weekly look-aheads or something like that. He would do a weekly update on one of the other YouTube channels, and he would always talk, and he said, what you want to do is you want to pile into your winners. You want to keep adding into your winners. You don't want to add into your losers. And you want to keep buying into strength. Buying into strength, I got that from Jesse Livermore, that book that was written. I mean, obviously Jesse Livermore didn't write the book, but he would also buy into strength. And it's up to you on what you want to do. If you think CDEV is going to continue to go up as it goes up, I would buy into strength. Yeah, that's a prudent, smart thing to do. If you want to do that, the way that I do it is, since I've been around the block a little bit, and I'm not saying I'm not like the the most experienced of all these guys. Some of them have 40, 50 years of trading experience, far more experience than I have. I try to overweight when it's low, and almost anyone is not immune to movements in the market. I was down 20, 30% on some of my positions, definitely in the beginning. I don't time everything perfect. Doesn't happen. I've mistimed adding money into allocating into positions. I've made decisions where I'm buying something in a middle of a move because I missed the bottom. I've done that, and I've been down 40, 50% on my positions. The way that I handle it is, if I like the company a lot and I think the company is good, I will double, triple, quadruple down in it. I will make the position so big or so much larger than it initially was, if it was a smaller position size, that you won't even notice the loss anymore because I piled much more into it. If I took a big position in the beginning, usually I have a pretty good entry point. So what keeps me from going in big and having a loss is getting in early at a very good time. And it's very hard to do that for most people. Most people aren't going to take a huge position when it's down and it doesn't look like it's going up again. Because when I buy, it's contracting into a point, and people are going to see that and try to use price as a justification to buy the stock, and it's not there. That price is not there. So I'm looking at other things. I'm looking at volume. I'm looking at how the stock is moving, the up days in relationship to the down days, the big buying pressure up days, and then the small leak off of sellers that's coming to a point and contracting. And I'm looking at market conditions. I'm looking at other sectors. I'm looking, is the commodity sector turning up? Yes. Is the entire oil sector turning up? Yes. Is this oil company have all of this type of signals saying that this is going to go up? Yes. Does it have the volume behind it? Yes. If you get all these yeses, then I'm like, it's go time. Is the ratio low? Yeah, we're at 50-1. This is it. This is when you pull the trigger big. So it's a combination of like six stars that are aligning. And they all come in alignment, and I'm like, it's go time. That's when you kind of have to pile in, and everyone else is going to tell you you're not. It's too low. It's not gone anywhere. It's a horrible investment. Why are you buying this? And then there's times where I'll buy into something for 2 or 3 years. It's a long-term investment. So I'm buying things like platinum. I've been buying platinum since 2019. And I'm piling in, I'm buying. It came down in 2020. I was like, boom, big orders with whatever I got. I had to transfer money around a little bit sometimes. And whatever money I was making, I was piling into it, stacking like no other. And some silver deals came up. I bought that as well. I was buying everything I could with what I could. And that's how you do it. Now we're in the middle of the move. Well, not even the middle. We're still in the beginning. This could be a big move in oil and some of these other companies. And I think, platinum is still down and silver's still down. There's plenty of time there. But I would be accumulating. I'm not going to sit on my cash and be like, I'm going to wait for a crash. Why? If we're going to go far higher and a crash, Here's something that I'll say. Anyone that you listen to on YouTube, including myself, whoever it is, if they're making predictions, like they are predicting that oil is going to go to 225 by 2024, they don't know the future. I don't know the future. They don't know the future. No one on this internet or YouTube knows the future with any sort of certainty. All these guys calling for market crashes, they don't know. All these technical analysts that are showing you charts, they don't know either. So what you have to do, and this is what I would do in engineering school, is you'd say, okay, what is the given? What conditions do we have right now, right in front of us? And if the answer is, well, you have incredibly cheap commodity prices that we have not seen in 100 years. Okay, that's a fact. That's not an opinion. That is a fact. We have very cheap ratios in commodities for platinum and silver and all these other ones. Well, those are facts. So what you want to do is you want to pile all the facts over here. So you're piling up silver's cheap, platinum's cheap, uranium's cheap, oil's cheap, and all these other things, right? They're cheap with 100% certainty. There's no arguing it. It is cheap, period. Commodities are cheap, oil's cheap, uranium's cheap. That is a fact. So then what I do is I say, okay, what do the supply looks like? Are we below the cost curves? If we're below the cost curves and companies are struggling to produce it, it has to go higher if we're going to continue to use it. That is a fact. It's not an opinion. So you want to buy things that are below cost curves and that have to go higher. And the lowest risk way to do that is through physical items. The physical commodity itself is by far the least risk way. And then you have to look at other ways of playing it if you want to amplify the risk. But the juice better be worth the squeeze. And if you get to a point where, let's say your royalty company has a potential to go up 5x or something like that, or something like that, 5 or 10x. And let's say the royalty company is like 1.5 times leverage or 2 times leverage the price of the commodity itself. But an exploration company, which carries far more risk, can maybe do a 5 or 6x of the commodity. Is that juice worth the squeeze? And how much money are you going to put towards that? That's the question that you have to answer. The way that I view it is the juice isn't worth the squeeze when you have a low probability of say gold and silver companies finding something where you could get far more money than the return on a royalty company with the risk. But that's my viewpoint. It may not match your guys' viewpoint, and that's fine. So yes, I would add into companies that are showing strength. When I was buying SM Energy, I bought a lot at the bottom. I really piled into it, and people were asking me, should I buy it? And this was at like $2 and $3 and $4. And I said, yes, it still has a very long way to go. Now we're up at $35 or $36, whatever it's at right now. And it still has a long way to go, but your risk reward is not nearly as good as it was in the beginning. That risk reward is changing on some of these companies. Some of the energy service companies still have incredibly good risk reward prospects. So I'm putting my money there. I'm a risk reward type person where you want to reduce your downside risk and you want to maximize your upside potential. And you're going to get caught buying into some of these companies because they're so volatile that you're going to be down 20, 30%. I'm already down that in Lightbridge and some of my additions because I was cost averaging in. And some of them I'm down quite a bit. And then I added more at $6 and something cents. So I was down a lot on it. I was down a lot in my original purchase, probably 40 or 50% plus. And I added more. I like the setup, so I added more in. And no one's going to be immune, guys. If you're going to go into this, you're going to have losses in some of your companies. It's the way it is. You have to ask yourself, is it worth the squeeze? Are we breaking the downtrend? Did we just mistime it a little bit? And sometimes you're going to. It's part of the game. No one's going to be perfect. So don't hurt yourself. What you want to do is you want to learn and keep getting better. And no matter how good you get, you're still going to have those instances. You're still going to have a down day. You're still going to have companies that go down, and you're going to have to figure out what you want to do with them. That's the way it is. It says, the flaw in your example, Andy, is that the swings you describe are all with house money. Yes, the swings are bigger, but your original investment is still untouched. If you are new and buy in, and your original investment drops, then the compounding effect of rising those lows in the beginning can make the difference between a 5x and a 10x down the road. This is why I think using stops is important when making your original investment. Once you're up, then I agree to let it ride. I mean, that I don't put stops on mine. I let it ride. It depends on what the setup looks like in the beginning. If I see an entire sector that's ready to go, I load into it. That's what I do. I'll put a good chunk in there, and I'll spread it across a good amount of companies, and I won't get it too big in any one company because I don't want it to go bankrupt or something to happen. But that's when you're buying at the bottom. You guys, I understand that you think it's easier because you're up and you're playing with house money. I understand that, but when I bought, there was a lot of risk. People were saying that oil was never coming back. People on the channel were putting in the comment section that oil was never going to go over $40 again. And I was like, yes, it will. I said, oil is going to go well over 100. And almost no one believed me. I was like the crazy person talking. And then I said, I think oil could go to $200 or $300 a barrel based off of the ratios. And then that was like way off base. I mean, people were linking me Kathy Wood videos and all sorts of stuff when I first opened this up. And they were saying to buy all the stuff that the prices have gone up a lot. So how much courage or how much experience would you need to buy something that everyone's telling you is trash? And if you buy it, and I bought some of those companies, I'm trying to think in the beginning, I mean, I was down 20, 30% or something like that because they were so volatile. I was cost averaging in. I continued to buy. On my platinum purchases in 2019, I was buying at the cost to me was about $900, $850, something on the lines of that. $850 to $930, I think, was my purchase price of the physical platinum. I kept buying in, accumulating ounces. And then 2020, it dropped all the way down to $634 or $600, something like that, in the 600s. I was down on my investment. What did I do? I bought a whole bunch more. So how did I know that platinum's going to go up? Well, it was below the cost curve. $600 and something is below some of the lowest cost producers for platinum. That gives me the confidence because I know what the cost curves are. I know that the higher cost producers are up at 1100. So even my purchases at 850 were exactly what you should have done, exactly what you should do, and you should be buying the heck out of it. Anything below $1,100. So what did I do? I just kept buying. I loaded in. I loaded up as much as I could when it was down in 2020, and I just kept buying in when it was coming up. I got a lot of platinum in the $700, $800 range. A lot. And that worked out. Why? How did I know that? The cost curves for platinum, and here I'll pull it up real quick. Platinum cost curves, and I'm literally just going to go to images, guys. And this is probably 2018 or 19. Here's 2019. Maybe I can get a bigger one here. If one of these will be bigger. Here's 2019 cost curves here, and I'll open it up for you guys. And it's right here. Here's the cost curves. This is $1,300 for Impala Platinum. The average here for 2018. This one says average 2018 platinum price was like $900 is the average. And then if you come down a little bit, this is $800 down here. So that's down here for $800. $600 is the cheapest there is $600. So I was buying platinum at the lowest cost to produce platinum in the world. You have to know this stuff. Because if you know this stuff, it gives you the confidence to get in there and really load up. Because you know it has to go higher. It has to. If you're using physical platinum, no one's going to go bankrupt. Nothing's going to happen to you. So that's what I did. I just bought the living poop out of it. And I was down on my position. I bought some at like 850, 900 and going down to 600. That's a big, 30, 40% loss, 30% loss. And I just kept buying. So I don't think it changes. I think when you figure this stuff out and you're confident, I don't think it's any harder to hold on in the beginning with a loss than it is playing with house money. But I can tell you this, there's far less. Your purchase price does matter, but that's why you cost average in. That's how you reduce your risk. You cost average in, and if you see the price go down and you know it's a good value, that is what you can control. You can buy it and you can control that. You can't control where the market goes. You can't control if there's going to be a market decline. You don't know that. No one else does. But what you do know is if something's cheap, you go in there and you buy it. And if it goes down, you buy more. And you have to know the macro market conditions. So you have to know macro and you have to know how to price assets. So if you're at the bottom of 2009, and the real estate market's crashing and you're getting really good deals, that is when you buy. You know it's cheap. You don't buy when it's way up in 2006 or 5 or 4. So I don't think you'll never have the confidence unless you really study this stuff. I don't know how else you can get that confidence. So whether it's up 5x, whether it's up 10x, it doesn't matter to me. The market conditions is where I sell. The ratio and market conditions. The market conditions have to turn around for me to sell my commodity assets. How much it's up is kind of irrelevant, at least to me. And a lot of people, what they do is they say when it hits some number, they're going to sell it. Well, why are you making that fictitious number? What is so big about a 3x or a 5x? If the asset is so undervalued and if history has priced this asset a certain way in relationship to other assets, well, what makes you think it's not going to get back up there? I mean, for me, when I look at oil, and if we were to get to a ratio that's, I'm just going to make it easy, 1 to 10, and let's say it can go to 1 to 5, one of those ratios. If you're at a 50 to 1, 50 barrels of oil to 1 ounce gold, that means that you can compress oil 5 to 10 times higher than where it was at that time for that ratio compression. And if you're doing, did I say that right? Yeah, 5 to 10 times from a 1 to 50 ratio. And if you've got leverage of a 3x or 4x on it, or a 5x, well, 5 times 10 is 50 times your money. 5 times 5 is 25 times your money. And some of these may even have more leverage. I don't know, because some of them are pretty leveraged up. So if I think the ratio is going to go there and the market conditions are still right for that ratio to go there, I will hold on. That is what I've determined, and that's what I've seen in history, so that's what I'm going to use. It's that easy. Now, I can tell you this as well. A lot of people are worried because they want to hang on to the gains, but are those gains really going to impact your life that much? If I had, here's something that I'll talk about here. In my work, which I don't care for as that much. It's not something I'm very passionate about. But if I were to double my salary, would my life really change? The answer is no, it wouldn't. I wouldn't do anything different. I wouldn't really eat any different foods. The car still gets me from A to B. I would live in a house that's very similar to the house that I'm in today. The only real impact would be I would probably retire a little bit earlier. That's probably the only impact it would have on my life if I doubled my salary today. Now, then the question would then be, how difficult is it to double my salary? And how happy would I be working a job that's double my salary? And that's a good question, because I think it depends on where you work, who you work with, and all those things that you have to answer. But if it's not really a big impact, and if it's that big of a problem to go up any more than where I'm at, then it's probably not worth, the juice isn't worth the squeeze. So me making $30,000 or more a year, I mean, what is that really going to do for me? Your taxes are going to go up. All that stuff's going to go up. So it's going to be, a little bit of a resistance going up. But if I have to spend 10 more hours at work a week, it's not worth it. The juice isn't worth the squeeze, in my opinion, and other people may disagree. So there's a lot of things that you have to kind of think about. And if this money really isn't going to impact your life that much, it's a little bit easier to have that viewpoint and hold on to your investments as well, and to make certain decisions in your life. I see a lot of people that get very, very aggravated that some people make more money, and just watch some of these people. Like, watch what they do in their life. We've got people who are senior directors. They're making a bunch of money, $250,000 plus. And, I just look at them, and they drink after work every single day. They literally get hammered every single day of their life. And that's like a form of depression to me. Like, why are they so unhappy? If that job, just because you make a bunch of money, is making you that unhappy, like, you should probably quit. You should probably go find something else. So my viewpoint is obviously drastically different than most other people. I don't live to work. I work to live. And if some of these companies, I know I'm turning this into kind of a company thing, but if some of these companies are like, it gets hard to move up on some of them based off of a variety of different reasons that I won't go into. What's going to happen is, if you're not getting rewarded for the hard work that you're putting in, wherever it is, you're just going to turn it and say, how little work can I do and still be employed if they're not paying you very well? And if you're running a company, or you're managing a group, or whatever it is, the people will figure that out quite quickly. And it all depends on the human resources, their practices and what they're employing. But and I don't even know why I'm going down this path, guys. But oh yeah, you were saying it's easier to hold on if you know that you don't really, if it's not going to make a huge dent in your life, and all you're really doing for is like, you don't really even need the money that bad, then it's not a big deal. Go with what is going to make sense. And if it logically makes sense that this is going up under these market conditions, and they've happened that way every single time in history, then I'm going to go with it. I'm going to ride with it. I'm going to ride with logic. And that's what you have to do. You don't get many of these opportunities in your life to do this. Bull markets and commodities only come a few times in your life. So I'm holding on. I've never seen the opportunity so large in my life. So I'm going to take advantage of it. I'm going to ride this higher. And you're not going to see me selling my shares to any of you guys for a while, unless the market conditions change. The ratios and market conditions. So give me a thumbs up for this content, guys. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.